Hello and welcome to Pura's weekly trading digest. Let's start with a brief overview of what was happening this week in the commodities markets. The main two events that greatly impacted grain and soft commodities prices during this week were, on one hand, Fed Chairman Jerome Powell's testimony before US congressmen, where he pronounced unexpectedly hawkish words hinting at further accelerated rate increases on one hand, and various scenarios regarding rapidly approaching expiration of the Black Sea Grain Initiative, crucial for wheat and corn prices being maintained under control. The deal was brokered by the UN and Turkey in the summer of 2022 and is set to expire on 18th March. Speaking about the latter, Kremlin spokesperson Dmitry Peskov said on Thursday, 9th March, that there are currently no plans for Russian President Vladimir Putin to discuss the extension of the Black Sea Grain Initiative with the United Nations Secretary General Antonio Guterres. During a visit to Kiev, Guterres stressed the importance of the deal, which allowed Ukraine to export 26 million tons of grain in 2022 in spite of the ongoing war. Meanwhile, Russian Foreign Minister Sergei Lavrov said Russia is fulfilling its own obligations under the deal, following accusations from Ukraine that its inspectors block some Ukrainian shipments. He added that the extension of the agreement is a difficult question. Top UN trade official Rebecca Grynspan will meet senior Russian officials in Geneva next week to discuss extending the deal. Corn. Following the March USDA WASDE release, May corn is down 1.75 cents. Despite the bull-friendly weekly export sales report, the corn market is down another 5 to 10.25 cents with double-digit losses in the old crop contracts. In the same vein, global WASDE data downgraded corn production by 3.84 MMT, though Argentina remained highly in focus and was cut once again by 7 MMT to 40 MMT. USDA also reduced their export forecast for Argentina by 7 MMT. Global final corn stocks ended higher by 1.2 MMT to 296.5 despite the smaller Argentina numbers. Soybean. Soy prices are trading 3.25 to 8.25 cents lower so far. The new crop prices are the weaker, with November contracts as the lead month down as USDA reported a private export sale for 184,000 MT of old crop soybeans yesterday. The weekly FAS report had 23,234 MT of soybean net cancellation for the week that ended March 2nd. New crop bookings were reported as 172,300 MT for the week. That left new crop bookings at 1.48 MMT compared to last year's 3.099 MMT forward sales as of March 2nd. USDA's monthly balance sheet had soy crush 10 million bushels MBU lower to 2.2 MBU, but exports 25 MBU higher to 2.015 BBU. That reduced carryout by 15 MBU to a smaller than expected 210 MBU. Wheat. Chicago wheat futures edged higher on Thursday after falling to their lowest in 18 months. Weekly wheat export bookings were 266,685 MT for the week that ended March 2nd. Trade estimates 150 to 500,000 MT, down 7% from the previous week and 13% lower than the same week last season. USDA made no changes to wheat's domestic balance sheet. Globally, they raised production by 5.14 MMT, with 1 to Australia to 39 MMT, 1 to India to 104 MMT, and 2.4 MMT to Kazakhstan to 16.4 MMT. Wheat stocks fell by 2 MMT to 267.2 MMT as USDA back adjusted carry-in and global domestic use was higher. Cotton. The nearby cotton market was trading on Thursday with light losses of 30 to 41 points. May was near the low for the day. Weekly FAS data had cotton bookings at 114,525 round bellies (RBs) for the week that ended March 2nd. That was a 3-week low and was 68% lower than the same week last year. USDA reported 287,000 RBs were shipped during the week for a season total of 5.674 M RBs. Census data showed 980,645 bellies of US cotton was exported in January. That was up 45% from December but was 31% lower year on year. The season's export total reached 4.897 million bellies through January, compared to 4.721 million last year and the 12 million bell WASDE forecast. USDA did increase expected world cotton ending stocks yesterday by 2.1 million bellies from last month, with China stocks boosted 2 million bellies to 39.4 of the 91.1 million world total. Summary and forecast. Apparently, the Black Sea grain deal will remain the sole most important moving factor for the grain markets for the next couple of weeks. Although initially the elevated volatility scenario looked predominantly realistic, the closer the deadline will be, the more upward price pressures market participants will experience. It's difficult right now to forecast its exact outcome, as Russian diplomats demand lifting sanction-related export payment restrictions, which in practice looks very unlikely to meet, at least quickly, to avoid market fluctuations and impact on the traders' sentiment. Elsewhere, the most interesting and dynamic developments will be around cocoa futures, which we covered in detail in our special report dated March 9th. Meanwhile, the Commodity Futures Trading Commission's weekly commitments of traders report showed that non-commercial traders, a category that includes hedge funds, trimmed their net short position in CBOT wheat and raised their net long position in soybeans.